You're watching today's video technical update presented by FX Times. It is Thursday, March 25th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. The greenback continues to exhibit broad strength. Let's take a look at different dynamics between the euro dollar, US dollar Japanese yen, and the Aussie US dollar pair. I'll also take a quick look at the Aussie New Zealand dollar pair. This video is being produced at about 2:15 p.m. Eastern ahead of the US session close. Starting with the euro dollar pair, we have seen the market broke an important support here, breaking out of this rounded bottom that failed to complete. So right now the market looks to extend to the next support at 1.3031, this cluster of Fibonacci level here. Before getting there, we saw that in the 4-hour time frame, the market has gone into consolidation after extending here 61.8% of this previous swing in the 4-hour time frame. The market looks to continue to the 132.20 area in the upcoming Asian European session. So that's the very short near-term projection. Looking at your stochastic, it looks like it's crossing back over within the oversold area. Looking at the 1-hour time frame, we saw this bearish divergence, and therefore continuation of decline is anticipated. So basically, we still have that 132.20 in the short near term, and then there might be some, a little bit more of a correction than this previous one. In any case, after that, we would be looking for the market to continue declining to the 130, 131 area. So that's the euro dollar. And you should note that this pair, the euro dollar, has been trending very strong, and the retracements have been fairly weak. So its trending component is a lot more dominant than its choppiness component. The US dollar Japanese yen pair, unlike the euro dollar pair, is very choppy, and you could see that in this daily time frame. Actually, you could see it in the weekly time frame. As the market has been sliding down, it has very strong retracements. Okay, so very choppy trend. The market broke that downtrend and is looking to rally in the intermediate and long term. This is a long term declining resistance, and the market finally violated that and looks to rally. So this was your basing action with a clear out in December. Now the market looks to test this neckline very soon. Looking at the daily, you see we are basically at a swing projection here, but I suspect because of the strength of this rally that the market will extend at least to this 94 area to test this previous high before any pause. So look for that in the upcoming Asian session for the market to extend, or Asian European session for the market to extend today's gains. However, this is where we're going to look for topping action and a decline and a bearish attempt there to give us a throwback. The throwback, if it can maintain another low above this previous consolidation area, that would be a very strong confirmation of our bullish outlook. And looking back at the weekly, our bullish outlook in the intermediate term is to this 101.15 area, or 101.50 area. This is the previous high here, and also a 38.2% retracement of the decline here since 2007. So this is a big move, and with the current dollar displaying strength, this is in the intermediate term, this is a viable target at the 101, between 101 and 101.50. But again, when we assess the choppiness versus the trendiness of the pair, we have noticed that this pair is very choppy. So expect your retracements to reach 50%. So looking back at the daily, when we see this top off, expect some kind of retracement that may be, for example, if the market tops off at 94 here, look for that retracement to come back down to 61.8%. But as long as it holds above this consolidation zone, the market would be confirming strength. If the market continues, then we are in this we continue to be in sideways action. So look for the market to after this rally to have a retracement around the 50 and 61.8%. Okay, then a rally from there, you could strengthen your outlook towards this 101 area, but you may want to still wait for this base neckline to break for a completion of this reverse head and shoulder. The neckline would break around 95. So here again, you look for that 94 area to top off, decline, and then from there your outlook should be strengthened, but monitor also that 95 area in case the market has another choppy correction from there. But ultimately, when this neckline breaks, that should be your ultimate confirmation of this outlook. Now we turn to the Aussie dollar pair, which has been strong, and you can see that in the weekly the market rallied since March 2009, but since October or even September last year, the market started to be in this sideways consolidation, slightly tilted down, and at the moment the market looks to have held this current rally below 0.9250. So looking at the daily here, we see that the market here topped off at 0.9250 and now is testing this rising support. Right now the dollar strength is broad, as I said, but it's the weakest against the Aussie. So of all the dollar crosses to fade against dollar strength, the Aussie dollar looks to be the candidate, but that we need a confirmation again from this break of the from a break of this declining trend line, and I would say conservatively that you might want to wait until a break of your previous high here at 0.9250. So the market is testing that strength. If the market breaks this trend line, it could continue to decline, but I would be but as soon as the dollar is turns weak again, now that's that could be in the intermediate term. If the market turns weak, then Aussie dollar is probably the best one to fade against the current dollar strength. So look for this market to bottom somewhere here. You see here, I'm gonna set up a Fibonacci retracement. So look for the market to find some bottom around this area. You will see that this will be coincident with this 200 moving average. Basically testing at the test of that 200 moving average, look for bottom, and a rally from there should be monitored at this previous high. And if the market does break this previous high, you see in the weekly we may be heading towards the 0.9899 area, which is this high in 2008. Okay, so the Aussie dollar, unlike the euro dollar and the dollar Japanese yen pair, the Aussie is the one that we would I would anticipate a return of strength. The euro and the yen have been very weak, so I would again, just to reiterate, I would anticipate the Aussie dollar to fade the current dollar strength. Finally, a quick look at the Aussie New Zealand dollar pair, which has been strong and is projected to the 132 area, but right now is in this consolidation or retracement pattern. Looking at the 4-hour time frame, we see that it's testing this 200 moving average and is holding up. Stochastic shows rally is getting ready, but I would suspect some further decline to test this declining support here. In the 1-hour time frame, we see that to return to our bullish outlook, we need the break of this declining trend line. So the Aussie New Zealand dollar pair is strong, but right now is in consolidation. Wait for this declining trend line to break to continue our bullish outlook towards 1.32. And that's it for today. Once again, I'm Fan Yang, your technical analyst here at fxtimes.com, wishing you good trading.